Hi everyone, Paul from Evalesco here, your resident insurance advisor. Today I just wanted to talk about benefit structuring for life insurance policies. I'll explain how it works and what it actually means for you in the event of a claim. So for example, we'll use some numbers. Let's say I have $2.5 million of life insurance, $1.65 million of total permanent disability insurance, and let's say $250,000 of trauma insurance. And to give it a bit of context, we'll say the $2.5 million of life cover is for the purpose of paying off a $1.5 million mortgage and $1 million left over to provide an income stream to support my family if I pass away. For the total and permanent disability insurance, $1.65 million again covers the mortgage, with $150,000 left over to assist with medical expenses. And finally, the trauma insurance, $250,000 there to assist with medical care and provide, help me cover living expenses for up to a year in addition as well. If I set up my insurance benefit structure as a linked policy, what that means is if I claim on any of those insurance benefits, they will offset the other. So for example, if I get into a really bad car accident and suffer a total and permanent disability event, meaning I can never work ever again, $1.65 million, that's payable to me. And in principle, I would use that $1.65 million to pay off my mortgage and set aside some money for medical care. It also means that my trauma insurance cover will be reduced to zero because it's completely offset by the TPD payment. My life insurance cover goes from $2.5 million down to, and I hope my maths is correct, $850,000. So that will still be preserved for me should I eventually pass away. Now, we typically think that that is an acceptable benefit structure because if I do eventually pass away, I don't need $2.5 million of insurance anymore because I've already paid off my mortgage. The $850,000 gets added to the $150,000 that I've already got, and there should be enough there in principle to help cover my family if they need any additional funds. So that's the linked benefit structure. If we have a standalone benefit structure, and we can do that on all three policies, what could actually happen is I get paid the $1.65 million, but I still have the life insurance benefit and I still have the trauma insurance benefit at $2.5 and $250,000 respectively. What could actually happen then is I might then suffer a heart attack. The $250,000 gets paid, so that's extra money. And then if I eventually pass away from that, the $2.5 million gets paid to my family as well, ending up with more than $4 million of total payout. I guess that in reality, that would be nice if that should ever happen for my family. But in practice, I guess at the end of the day, having a standalone benefit structure can mean that you've got more cover than you really need. And it also means that you're possibly paying more than you really ought to be paying as well. So here at Evalesco, when I'm looking at the benefit structure for our clients, it's all about determining what the real need is at the end of the day, and then trying to structure it so that it is as cost effective as possible for you. But that's basically how we sort of look at benefit structures when it comes to life, TPD, and trauma insurance. If you've got any questions, feel free to hit me up or speak to your insurance advisor. Thanks.